Hey guys, welcome back to the channel. Today I want to talk about PCE, that is the Personal Consumption Expenditures Price Index, and that came out actually September 30th, so I'm a couple days late on that. However, let's go ahead and talk about today. Let's talk about what the PCE is, what happened, what the report shows, and last but not least, kind of what we can expect from it. So if we look at our trusty site, Investopedia, what are personal consumption expenditures? I'm going to read just a little bit of this here so we're all on the same page. It's an estimated total of personal consumption expenditures compiled by the U.S. government monthly as one way to measure and track changes in the prices of consumer goods over time. PCEs are household expenditures. A couple more things about that. We got personal consumption expenditures as a measure of consumer spending. PCEs are one measure that is reported by the Bureau of Economic Analysis along with personal income and the PCE price index in the Personal Income and Outlays report. PCEs include how much is spent on durable and non-durable goods as well as services. PCE price index is the method used by the Federal Reserve to measure inflation, which is why we're looking at this today. And the PCE price index is based on prices from all households, corporations, governments, along with gross domestic products. And just really fast, I'm going to contrast because you guys have heard of CPI, Consumer Price Index. That is also what the Fed uses. However, from what I understand, the Fed likes PCE a little more. So really quickly, the CPI measures a specific basket of goods every month, month to month, and that pretty much stays exactly the same. So they check the prices of those things and see how inflation is affecting those specific items. Compared to the PCE, a good example is they have, let's say someone normally buys like ribeye or whatever, sirloin, and all of a sudden they're not making as much money or they're having to spend more money and they switch to ground beef. The PCE will actually track those changes that's happening there. So the PCE is a little more, it evolves a little more with how people are spending. It also includes how businesses are spending compared to the CPI is just the consumer. PCE has to do with like businesses and like healthcare insurances, stuff like that as well. If you guys like this content, please consider subscribing, smash the like button, and leave a comment. Let me know where you're from. So this is the headline of the PCE, and you can see August was 6.2 month over month increase, July was 6.4%, and June was 7.0%. So looking at that, just that, you might think that it's looking better. So the overall inflation per PCE looks like it might be slowly coming down. However, let's look a little deeper at this. So I'm going to read a couple of the highlights here from the document that the Bureau of Economic Analysis put out of the PCE. While they have some monetary stuff, I'm just going to talk in percentages because I think it's easier to understand. So personal income increased by 0.3% at a monthly rate. Consumer spending increased by 0.4%. And I would think that the Fed actually wants that to slow down. So both of those numbers went up. It says the personal savings rate was 3.5% in August, which was the same as July. So under the consumer spending part says personal outlays increased in August, reflecting an increase in consumer spending for services that was partly offset by a decrease in consumer spending of goods. So if you want to know what's included in services, there's a big list here. However, it says the largest contributors to the increase were housing and utilities, led by housing. Also, transportation's on there, it says led by public transportation, and healthcare is on there as well. And for goods, the primary contributor to decrease was gasoline and other energy goods. So guys, I do have a chart pulled up here. I do know that some people are either driving or they're just listening more like a podcast style. So I'm going to just say a couple of these things here. So it says changes in consumer spending in August of 2022. And it says consumer spending increased by $67.5 billion. The biggest things were housing utilities was 29.6. I believe that's billions of dollars. Transportation services, $20.6 billion, and healthcare was up 15.3%. I'm sorry, $15.3 billion. And it looks like gasoline, other energy food goods was down $42.1 billion. So the PCE price index for August increased 6.2%, which we talked about earlier from 1 year ago. Energy prices increased 24.7%, while food prices increased 12.4%. I don't know about you guys, when I'm going to the store and I'm going to check out, man, something that used to be like the whole thing would be $30 now feels like it's $45, $50. So it's I think it's hurting everybody. So now we'll talk month over month. So compared to July, the PCE price index increased 0.3%. Energy prices decreased 5.5%. Food prices increased 0.8%. So this is what's called the core PCE. It's PCE excluding food and energy. It says that increased by 0.6% from July to August. So I think that core PCE increasing by 0.6, it looks like from June to July, that didn't increase at all. It was 0.0, and then July to August went up 0.6. I believe that the Fed is actually going to raise rates again. I don't think we're going to get any type of slowing down yet. I know they're predicted to do another like 125 basis points by the end of the year, which would most likely be a 75 and a 50 basis point hike. PCE is showing that they will probably do that. If this had gone down in any negative way, they probably still would do at least 175, but maybe they would slow down after that. However, looking at this, I don't see them doing that at all. Inflation's still going up. Their job's to get inflation down. A lot of people think they're going to overdo it. I understand why they have to do it though, because it's still going up. So the next question is, what do we do with this information? So I understand why the bears are out there. So people that don't know what bears are, that means people that think the stock market's going to go down. If the Fed is still having to increase rates, these inflation numbers are still coming in. We still have CPI that'll come out October 13th. PCE and PCI or CPI, they look at both of those. But with this being up, I imagine CPI will also be up. But so my strategy personally, I'm still going to dollar cost average into the stocks and index funds that I like. I am not a financial advisor. I'm not telling you guys to do that. Nobody knows what the bottom of the market's going to be. That's why I'm going to dollar cost average in, because that seems to be the best strategy to do. I've been dollar cost averaging into the stock market since about October 2015, and that is definitely the best strategy. I think it's actually good not to get into too much of the noise, like all this media stuff going on. It's just bad news. They're trying to shake all the retail investors out. So the retail investors are basically like not Wall Street money. So it's like individual investors. Anyway, we don't know when the bottom of the market is, and if we knew that, we'd all just wait until that was, but I'm still going to dollar cost average in. However, based on this information here, I can see the stock market dropping another 5-10% maybe after CPI comes out. I could see the stock market dropping. Actually, I mean, this document came out on Friday, so I can see next week coming down another, who knows, 3, 5, 10%. Some analysts are thinking the S&P is going to go down another 10 to 20% from here even. So I don't know if that's true. Nobody knows if that's true. The more people get bearish, that means the more people think that the stock markets go down and sentiment keeps going down. That tends to actually mean the stock market is about to bounce back. So hopefully we can get at least a little bear market rally here. So anyway, if you guys are still with me, please consider subscribing. Please comment down below what stocks you guys are looking at. If you want me to deep dive into any of the stocks, we can do a price check on it, or look at the balance sheet, that type of stuff. And smash the like button. One last thing here, guys. I am a full-time photographer, and here's a beautiful picture I took a couple days ago. I don't know why this is showing up so bright on YouTube. However, I'll put my Instagram up here. The reason I share this, I started investing. This is like my why of investing. I started investing pretty heavily. I was a full-time emergency room nurse, and I didn't want to work as a nurse anymore. It's not the actual art of nursing. It's such a burnout job, man. And anyway, I wanted to get out of nursing, so I started investing like 20-25% into the stock market since 2015, and I've stayed really disciplined in it, mostly doing index funds. And anyway, I was able to save up enough money so that I could say, hey, I'm going to follow a passion and get out of nursing. I still have my license and stuff. And anyway, I actually do portrait photography. That's what I get paid. Instagram up here. You guys can follow me on Instagram if you want. But anyway, I always liked when some of my favorite YouTubers kind of share a little bit about their personal life. Just it makes it a little more meaningful. So anyway, hope you guys are having a great day. I'll talk to you later.